Now, we're going to begin with our stock of the day. It is Mineral Resources. It's bought up a close to 10% stake in the newly listed lithium company Kali Metals. This is out of WA. Kali Metals beginning trading on the ASX on Monday, soaring as much as 75% on the day. And ahead of trade today, MinRes clarified that 9.97% stake was separate to Chief Executive Chris Ellison's 4.85% holding, which is held through his private company, Wielandt. In fact, a number of his associates also piling into the company too, maybe an indication there's nothing else to do over there in WA. I can afford to say that because I am a West Australian boy myself. But of course, lithium prices also having come off significantly, well, more broadly, battery metal prices having fallen substantially over the course of 2023. So, Kevin, how do you see this play from Mineral Resources?
That's a good question. Mineral Resources is a company, of course, that we in TeamInvest have followed for quite a while. Although, interestingly, it wouldn't meet our criteria now for several reasons. But having held it for a long time, a lot of our members still hold significant amounts of it. So, and I'm included in that. It is a very entrepreneurial company, and Chris Ellison has always tried new things. He's always gone for the opportunity, and it's shifted over the years from being a mining services company much more into mining, and particularly the battery mineral. It's also interesting that battery minerals are supposed to be the future. All the pundits were saying, yes, we're going, battery minerals, they're going to be great. They're going to be high forever. They're going to be great demand and all that. And of course, now they're pulling back because they're like any other mineral. Whenever the price goes up, people start piling in and finding more of it and producing more of it. And economics changes, and so you get the up and down of the mineral prices. I'm not going to try and predict what's going to happen, except broadly, it is likely, I think, that lithium prices will come down over the long term because more people will produce it. And ultimately, the demand will hit a level, a plateau, even though it's expanding really well. Chris Ellison has in the past certainly been very good at taking advantage of all the advantages and been entrepreneurial in developing initiatives to drive down the costs of his production. So far, I'm confident that he knows what he's doing until we see otherwise. But yes, I have a lot of trust in him.
Trust, but not enough to actually pile into the company yourself. Then, are you concerned perhaps it's putting too many eggs in the one basket of lithium?
It could be. I don't know. Yeah, and it's become a riskier company from a TeamInvest point of view, for exactly that reason, that it has become more of a mining company, both iron ore and lithium, whereas it used to be a mining services company. So it had a much more predictable stream of income and that sort of thing, which is why we started looking at it in the first place. Although when you say I'm not piling in, I have held it for a number of years and it's done very well. It's certainly one of my best performers. So I'm not getting out of it just yet, but yes, you're right. It is much more risky than when we first started looking at it.
Okay, going to put that down as a hold then, given that's where you are right now. Andrew, what's your view?
Yeah, look, it's an interesting one. It certainly is a personality stock. Chris Ellison's done really well with this business over a number of years, and as you were saying before, not only does he own some of the new listing personally, but of course now putting Min Resources money into it as well. I guess the thing that I'm a wee bit concerned about, as Kevin was just talking about before, we've got that weakness in the lithium price, and there's been some quite a bit of damage being occurred in that sector over the last 12 months. The other thing I'm just noticing is that short interest in MinRes is rising. So remembering short interest is basically the percentage of the book that's lent out in anticipation that the share price could fall, and it's been steadily rising, and it's now around 5% of the register is short. That's its highest level in the last 12 months. So even though I don't mind the business, and certainly that exposure to iron ore, it generates about $2 billion a year from iron ore, and that's certainly not unhelpful considering where the iron ore price is at the moment. That exposure to lithium, I think, is probably hurting them a little bit, and from that short interest point of view, that's not helpful either. So on balance, it's a hold. It's a great business, but I just think there's some fundamentals at play that you just need to be a wee bit cautious in the short term.
Cautious. All right, from both, but both a hold there for our stock of the day.